Folks, welcome back into the 7 Financial Blind Spots. We're on number 5. And Prashant, this is a big one, and this is a controversial one. Should I or should I not pay my mortgage off early?
Yeah, it's an interesting discussion, right? Because everyone has a different opinion on that. We see people who love taking the deduction. We see people who just don't want to have any kind of debt when they retire. It's really, more of an individual's decision. I wouldn't say that there is a right or a wrong, just differing opinions.
Now, let's say that, yes, because it is a good feeling to have a house paid off.
Yeah.
And I have a 15-year mortgage myself, and I only make 11 years now on it, and I'm at 2.9%.
Okay. Yeah.
Which is, I got it right at a good point.
Yeah,
I refinanced. I did a no closing cost, so it didn't cost me any money to refinance down there, and I'm paying one extra payment every year.
Right.
So really, I'll get that paid off a lot faster than 15 years, but really, as a planner, I am doing things that I shouldn't be doing.
Yeah.
Very low interest rates now. I should hook the bank on for 30 years, accepting a very small payment for 30 years and never have to worry about the house.
Absolutely. Yeah. If you have the opportunity to earn a little bit more, maybe it's in the market, maybe it's through other vehicles, makes sense to take advantage of what the bank's offering you at that point in time.
Half the people I talk to want to get the house paid off, regardless of what I say.
Yep.
Even to the point where they want to take money out of their IRA. To pay the house off. Now, that's a big mistake.
Yeah, I would tend to agree. When you're taking money out of the IRA, the one thing you're always going to have to do is give some of it to Uncle Sam along the way. And so you could take a tremendous tax hit that really doesn't make it worth it to take money out of a pre-tax account to pay off your home.
Plus, you're stealing money from future you because you're taking your money out of your retirement account. You're paying the house off. That money will never get put back in the retirement account, despite what you say.
Yeah.
And if you do eventually put it back in, you've lost all those years of earning power.
Yeah, absolutely. That's a great point. I mean, retirement savings are just that. They're meant for retirement, not necessarily to pay off the house to make you feel a little bit better before you get there.
Now, does paying the house off, having a zero balance on a house, does it make the house worth more if you're going to sell it?
Absolutely not. It does not matter.
But I've heard people say that. It's funny, isn't it? All right, and also, does paying the house off guarantee that you'll never have another bill connected to the house?
Absolutely not.
Yeah.
Yep. So
home improvement costs, taxation every year on that, and insurance. So you still have bills on that. So not a bad thing. And it's great. It would be a great feeling to have the mortgage in your hand, or being able to tear it up and shred it because you don't have a mortgage anymore, having the deed of the house.
Yep.
But you got to remember there's always a give and take. So if you're taking money from someplace, now what about the person who inherits some money and they say, well, I want to take this inheritance and pay the house off. One of the first things I say is let's make sure you have your retirement accounts funded fully before you start paying the house off. Do you agree with that?
Yeah, I definitely agree with that. Again, especially when you're heading into retirement, you got to make sure that your plan can support whatever standard of living that you want to have. And just like you said before, there's always a trade-off. And so while paying the house off may be a great feeling and a great thing, if it doesn't really benefit you down the road for your retirement for really the next 20, 30, 40 years of your life, does it really benefit you that much today?
So I'd say if they're thinking about it, they should contact you before you do it.
Yeah, we'll do an analysis for you to see, where the best place to put the money is to really benefit you, not just for today or the next 5 years, but through your retirement 20, 30, 40 years in.
And if you're still working and you don't have a good rate right now, it's a good strategy to at least refinance where you still have a job, because they'll give you money still, and refinance to a very low rate in a no closing cost fashion.
Definitely doing that before you get to retirement makes things a heck of a lot easier.
Now, one of the other things I want to just touch on here is reverse mortgages, because you hear about a lot of that when people, some of them are oversold and some aren't needed, but many times a reverse mortgage makes sense.
It could. In some situations, it could, to be able to get you some more income on hand. So, it's a very unique type of thing, whether or not it makes sense for each individual, but it's definitely something to consider, especially as you're heading for retirement.
And like anything, before you do anything in the financial world, contact a team you can trust and get a written plan put together.
I tell you what, I always like getting the phone call, hey, what do you think I should do, instead of, hey, guess what we just did?
Yeah, because some of those decisions after you don't agree, you can't reverse them, right?
It's too late.
Yeah, so very, very important to get the true plan put together. Now, one of the big enemies of that plan is procrastination. And that's our 6th blind spot. We're going to talk about that when we come back.